Assalamualaikum and hi everyone. Welcome to my channel. In today's presentation, we are going to learn on how to prepare a financial statement for publication. We are going to prepare the statement of profit or loss and other comprehensive income, the statement of changes in equity, the statement of financial position, and also notes to the account with the focus on notes on PPE, which is the disclosure on the movement of PPE. So let's look at the question, and I've picked up a question which is question 1 from the exam FAR210 July 2021, but this is the edited version. So a few things that I've edited, and you would see that the editing part is the one in red. Okay, let's look at the questions. We have this trial balance of Rinee. So that's the company, and the year end of that company for that current year was 31st of December 2020. This is the current financial year, and this is the date that you're going to prepare the statement of financial position, statement of changes in equity, statement of profit or loss, as well as also the notes to the account will cover from the one at the beginning of that current year, 1st of January 2020, for the notes on PPE up until 31st of December 2020. Let us look at the requirement. You are asked to prepare the statement of profit or loss. That was for 8 marks, and then statement of changes in equity, statement of financial position, and for the notes on property, plant, and equipment. So let's see what we have. First things to do is, before you start doing your statement of profit or loss, which is the first requirement, you need to go and classify your item. Okay, this is like doing what you have done perhaps in your earlier study. So this is actually an income, and that will go to the SOPL. This is an expenses. This is an equity distribution, so this will go to the statement of changes in equity. This is a current asset that will go to the bank. This is actually current asset, and this is a current liability. And you have also other information so that you will classify them correctly, and you are going to put them correctly in the correct statement. So our share capital is equity. This is the one that was given before any adjustment took place. This is the retained profit as at 31st of December. Bear in mind there are some additional information that you will have to take note, but this is also equity. Asset revaluation reserve, there's some editing that I've done here where I put land, which is asset revaluation reserve balance here is for land as at 31st of December 2019. So that is also equity. Debenture is non-current liability. Income from investment, it is an income that will go to the SOPL. So income and expenses will go to the SOPL. Other income also will go to the SOPL right after the gross profit, the statement of profit or loss. So this is an income. Fixed deposit. So I made some kind of edit here where you see that I put some information that it is less than 1 year. So if the fixed deposit is less than a year, that will be classified as current asset. However, if the fixed deposit is more than a year, that will be classified as non-current asset. So this investment, if that remains silent, this will be a non-current asset. Land, of course, non-current asset. Building, non-current asset. Take note that land, building, plant and machinery, all this will have to be later shown in your notes to the PPE. So later when you prepare notes to the PPE, make sure that you are going to include all this in your information on the notes on PPE. So these are all these are non-current asset. However, these 3 items here, accumulated depreciation, they are negative non-current asset because that was a contra asset account to the building, plant, machinery, and motor vehicle, since the accumulated depreciation is being deducted against the cost to arrive at the carrying amount. So we have the also information on allowance for impairment loss of trade receivable as at 31st of December 2019. So there are some other adjustment that you may have to take note, but this was from the last year figure because this would be actually 1st of January 2020. So this is again a negative current asset because that will be deducted later after certain adjustment with the your deducted against the asset that is your accounts receivable here. Okay, these are your additional information. So you can do your template first, but what I'm going to do is I'm going to do the additional information first, and then only will be doing the preparation of the statement of profit or loss, right? So depreciation, the first item. So you know depreciation is an expense. This is on property, plant and equipment, and that is to be provided. Everything is on yearly basis. So meaning that full year depreciation regardless the length of time in the current year that you have acquired the asset, right? For that new asset, for example. So if building on cost, so if you check the cost of the asset for the building, so if you were to calculate depreciation, that would be 2%, and that would be 2% from 890,000. Yeah, so that will give you some amount. You will calculate that, and this is 20%. 20% will be on the carrying amount. So that's just now we take this, and the carrying amount for plant and machinery would be 650,000 minus 260, because that would be cost minus accumulated depreciation, and this would be on 650 minus 260,000, and then only multiply by 20%. So that will be done, and this calculation will be need to be reflected in the calculation of the expenses. Motor vehicle was on cost, so this would be 10% times the cost 415. So if you look, there are no other addition to the asset of this company or no disposal in this particular question. However, should you have any disposal of asset or any, let's say, addition of asset that happened during the year, and you need to go and incorporate that. So let's just put the figure for this for a while. For the building, that would be depreciation on building would be 17.8, and the one depreciation on plant and machinery, that would be 78k, and this is going to be 41,500. Okay, this is the one that you are going to debit to the depreciation and credit to the accumulated depreciation of the asset respectively, all the three asset accordingly. And when you debit to the depreciation, you need to go and show them in the expenses, and you need to go and think of which expenses will you include. And when you credit in the accumulated depreciation, this will be reflected in the statement of financial position, but before that, this will be adjusted in the notes to the PPE. Okay, so we will be doing that in the notes to the PPE, as well as doing that in our workings for the expenses. Further, you are informed that the depreciation on building, plant and machinery. So I've also made some editing here, which is the machinery should be the word, because earlier on the question says about equipment, so that has been edited. So they are to be treated as admin expenses. So building and plant and machinery. Remember, the asset is about plant and machinery here. You can see here. So plant and machinery. So just make that little amendment there. Plant and machinery instead of plant and equipment are to be treated as admin expenses, whereas you have another asset that is your motor vehicle will be under distribution, so that has to be put correctly. So here, this one is distribution, these two are admin. Okay, then we go and do the second part is on revaluation of land. There is a revaluation that took place, so the company adopts revaluation model. Since you are informed, the company incorporate the new value in the books of Rinee for the year ended 31st of December. Journal entry wise, this will be debited to the land account and will be credited to the asset revaluation reserve of land, right? So that would be 3 million. The land is not depreciated, so you will compare with the carrying amount of the land. Carrying amount of the land is at cost because no depreciation, since it is a non-depreciable asset. You are informed that here, right? So therefore 3 million minus that would be 2, what was it just now, 2560, 2.56 million, and that will give you 440,000. So that will be credited also 440,000. And when you do this, you need to go and reflect this in the statement of profit or loss, which is in the section other comprehensive income. And also in the statement of changes in equity, this will be under the asset revaluation reserve, and also in the notes to the PPE. Okay, you need to go and show this in that three places. Next is about the net realizable value of the inventory. You are informed the net realizable value of the inventory was 260,000. So what you have learned before is that on subsequent measurement, the inventory shall be measured at the lower between the costs. So the cost of the inventory was 265. You should measure at the lower between the costs and the NRV. So this is the NRV. So what you can see is that 265 is the cost and RV is 260. So therefore there is a write down to the inventory, write down of inventory, and that would be the difference between the two amount, cost, which is 265 minus NRV 260. So you will have 5, and this 5,000 is the one that you will debit to the cost of sale in the statement of profit or loss. You are going to add to the statement of profit or loss with this 5,000, and you are going to credit to your closing inventory, and this closing inventory will be written down by 5,000, and it means that you need to go and reduce in your statement of financial position with this 5,000. Then we go and do number 4. Number 4 is for A, B, and C. We'll finish all the adjustment first. Okay, let's just take another color here so that you can differentiate about things that are a little bit different here. Okay, we have 5th of May, which is during the year, the company decided to issue 1,000 units of ordinary shares at 2 ringgit. So this 2 ringgit is the fair value of the shares, and that was to finance a project, and this was to be issued to get the cash, because the cash will be needed to finance a new project, and all the shares issued were fully subscribed, so meaning that the amount received equal amount issued. So therefore this one would be debit bank, and that would be 1 million times 2 ringgit, that would be 2 million, and you will credit ordinary share capital. This is just the shortcut way of doing it. So basically there was an increase to the equity, statement of changes in equity, as well as there is an increase to the current asset bank, right? That is for 4A. 4B is about accrued or auditing fees. That was to the amount of 35. So for 4B, you will debit accrued audit fees. You will debit audit fees. Audit fees, just make some correction here. Audit fees. And you will credit accrued audit fees with the amount given, which is 35,000 and 35,000 here. So make sure to include this in the current liability, and this one you need to go and include under the admin expenses. Next is about allowance for impairment of trade receivable. That was at the end of the year. So this is actually the ECL, the estimated credit loss at the end of the year, which is the allowance for impairment balance at the end of the year. Earlier on, you were informed the allowance balance at the beginning of the year here, 18.9. So if that is the case, you have the allowance brought down balance 18,900. right? And then you will have to check if there is any bad debts written off or any bad debts recovered. In your case, none. So therefore, you just simply compare the one that will be the one at the end of the year carried down, 21,250 with 18,900. And if you compare this one, you will get 21,250. You compare, you would see that this is greater. So therefore, there will be an impairment loss, and that impairment loss is the difference of 2350, and this there is an increase because the balance has gone up from the beginning. At the end it becomes higher, so this will be charged under your or included under your admin expenses. So in terms of journal entry, debit the impairment loss of trade receivable in your SOPL, and this will be credited in the allowance for impairment loss. The difference of how much? The difference of 2350, and that will be shown as an impairment loss, which is will be under the admin expense. So we can now do our question, which is doing the answer now. So we will start with the statement of profit or loss. Okay, we will start off with the first item. We will start with the sales or the revenue. And the revenue for this company, you can take them where it is from the statement of, from the trial balance, right? It is from here, the one here. Okay, you have this figure. Check if there is any let's say anything that you need to adjust, right? In case there are some adjustment. So I'm going to put it side by side so it's easy for you to see what I am showing. So I'm going to put this also next to each other. So I'm just going to take this and put it here, and it will be easy for you to refer. Okay, let me just take a time to do that. It cannot work, never mind, we just do it like that, and I just leave it as it is, which is just leave it as it is. So we can just flip through. Okay, you can put sales, then you put your cost of sale, but remember the cost of sale earlier, we need to go and adjust with the written down value. So the write down was 5,000. Remember, I include just now cost of sale that you need to add to the cost of sale adjustment here, the one that I did here. If you can recall, it is here, right? That was on cost of sale, adjustment number 3. Next is the item on admin expenses and selling expenses. Here you need to go and figure out that by doing your working. So let's start by doing this working, where we are going to show the working for selling, admin, and also the finance costs. But we start off with selling and admin first. So for selling, first you go and take the one as per the trial balance. The one as per trial balance was 856,460 for the selling, and for the admin was 1250650. The second one is to include the director's fee. So if you check your item in your statement of profit or loss, sorry, in the statement in the trial balance, you have taken this, you have taken this, you have taken this and this, and now this is the next one, director's fee. So there are no adjustment for directors, we just include that. And then there's another one which is relating to depreciation. We have earlier calculated the depreciation based on information number 1, and you are informed depreciation of building and plant is under the admin expenses, but you were also informed that depreciation for motor vehicle was under selling expenses. So for a motor vehicle was under selling, so it was 41,500. And at the end, you have also information B. Remember, we were doing information B just now. That was regarding the fees for the audit fees, which is accrued audit fees, and also information 4C. 4C is about debenture interest. So let us look at information 4C for a while. We have missed that, right? There was an outstanding debenture interest. So outstanding debenture interest means throughout the year, you have the debenture of 315 here, and the rate is 10% for the interest. So throughout the year, none of the debenture interests have been provided for. So that outstanding means this is about accrued debenture interest, and that would be 315, the debenture carrying amount, times 10%, and that would give you 31,500. So this is the one that you will debit to your debenture interest, and you will credit your accrued debenture interest, and this will be included under the finance cost. So the finance cost, you now get one of them, which is finance cost and debenture interest. Any other loan interests are also part of finance cost. Bank overdraft interests are part of finance cost. Same goes to the, if you have in case redeemable preference dividend. And then we have our information on the allowance or the impairment loss allowance of receivable. Remember information 5, where I just compared the two figure, and that was the amount that should be shown where in the part or relating to admin expenses. With that, you have the total for your expenses. That should be 214,800, 897,960, and 31,500. And I label the working so that easy for you to cross refer. So working 1, working 2, working 3, and this is going to be your figure. Finance costs. Right now we go on and look at one item that is in our trial balance. The one in our trial balance, after we have done that, you would notice that I'm trying to pick up things that are within the one in the statement of profit or loss. There is one item here, income from investment and other income. Other income will be put as one line item. Income from investment also will be put as one line item in the statement of profit or loss. Other income, let's say rental revenue, or maybe commission income, or maybe there is a decrease in loss allowance of impairment loss of receivable. Those can be also included as part of other income. Income from investment can be interest income from fixed deposit, or maybe also dividend income from other companies. But here you are not informed, you just being informed about the amount as a total. So we will take that and we're going to include it here. Okay, it will be here. So you are going to show the item here that was investment income. Apart from that, your other income is included here right after gross profit for the other income, right? And then after that, you get your profit before tax. Now you're going to find out the taxation. So the taxation is given in the information, last part of the information, taxation expense. So for taxation expense, so you are informed that there is an estimate tax of 92,000. So this 92 will be the one that you will show in the statement of profit or loss. However, what you would have to check is that what is the tax paid during the year, and will you have a tax recoverable, or will you have a tax payable, right? So what you're going to do is you're going to debit the tax expense, which is in the statement of profit or loss, SOPL, and the tax paid, you can see in your question in the statement, the trial balance, there was a tax paid there, and that tax paid was how much? It was 89. So if you compare that with the tax expense, you are being charged with 20 with 92,000. So you credit tax paid, and that was, here was 92, here is 89. So you can see there is a difference of 3,000. The different 3,000 will be the one that you are going to treat as tax payable, and this tax payable will go to the current liability. Tax expense will go to your SOPL. Right. So let's do that in our statement of profit or loss first. So you show that 92, and the rest is for you to just total up the profit after tax. And remember, our earlier adjustment was about other comprehensive income, revaluation, surplus land. We have earlier calculated the land, and the land was the surplus was 440,000, and therefore the total comprehensive income is 1242540. And for your information, you would also I provide some working for the other comprehensive income also at the bottom here. So done with that. So this figure here, the one that you have here, which is the one in green there, will have to be reflected when you prepare the statement of changes in equity. So let's start. There are altogether, you can see here, three items. One is ordinary share capital, and then you have retained profit and your asset reversion reserve. I also include a total column. So what you will do is you are going to first put the balance at the beginning of the year. So what you will do is you will take this from your statement of from your trial balance. You're going to take that from your trial balance, and that would be the amount would be from the trial balance. We go to the trial balance. We go to the trial balance. Let's check the trial balance first. Okay, you go and take the balance here on share capital, retain profit, and ARR. Okay, take that balance and include that balance in your statement of changes in equity. That is what you are doing. And where was it? Okay, it is in the next one. So include that, and then you put the profit for the year that was taken from the SOPL. And for the other comprehensive income, you would see that it was included under asset revaluation reserve, as I earlier mentioned. And then you also have to include the item on dividend. So in your information, you were earlier informed on dividend, and that dividend was just interim dividend. So let's just show that item. The item for interim dividend is given in the question. So let's look at the item. Here, this is the interim dividend, and there is no other proposed dividend whatsoever. So you will just take that. This one has been done. This is done. You take that and include them in the statement of changes in equity, right under the retained profit column. Right under the retained profit column. Make sure you do that correctly. Next is to go and settle all your item here. So there should be one more item here. Actually, that should be 440. Okay, actually this part are not given marks, so I will just hide this. Marks are given for the part related to retain the three reserves, so I just hide that for it from you. Okay, if you do it, it's fine, but now I'm going to just focus on the first three columns. So that will give you 2116380. Right. Next would be to prepare the statement of financial position. We will start off doing the non-current asset, and our non-current asset is to start off by doing our PPE. So let's go and look at our PPE notes. So first, put the balance of those items at cost. Make sure you have the one column for land, one column for building, one column for plant and machinery, and one for motor vehicle. Put the balance. These were taken from the statement, from the trial balance, right? From each of the asset that you have. So include that in your question. After you have done that, you put your balance for accumulated depreciation, which is the one at the beginning of the year. The one at the beginning of the year. Where do you take that from? It is from here. So I'm taking it from here. So this item, this item, this item, and this item. So we are mostly done with the beginning balance, right? Then put the revaluation surplus, because that is the only thing that you have for your adjustment. Only the revaluation surplus for land of 440,000. I have earlier reminded that you need to include that in the notes to the PPE. At the same time, include the depreciation charge for the year. So this is the only adjustment here, and this will actually from the workings that you have done for your depreciation or in the workings for admin and selling expenses. Then you will get your item for your balance carried down at the end of the year, 31st of December. Then you get your item for your carrying amount. Our focus is this yellow figure here, and this yellow figure here, the one in this yellow color. You're going to include that in the statement of financial position, right? Then you will continue with the next item, which is your investment. The investment is here. Check that, it's here. And then your fixed deposit, since it is less than a year, I've already amended the information. Therefore, the fixed deposit that is less than a year will be under your asset. And before that, I include the inventories. This is the inventory. Okay, where you have written down the inventories from cost down to net realizable value of 260. Then you have your fixed trade receivable. Trade receivable, you have to deduct with the allowance for impairment. The allowance for impairment, right? That was the balance. And the trade receivable, the figure that was given is in the trial balance. So you take the trade receivable figure here, right? And the allowance is the one that were given in the additional information number 5, this one. So you will do that and you get your net realizable value of the receivable. I hope this is going to help you. Next would be the one for the item bank. So remember earlier there was issuance of share, right? Of ordinary shares. And when you issue ordinary shares, it was 2 million ringgit. So therefore the ordinary shares would be 2659. And this is the last item in your asset section. That is your fixed deposit. I include under current assets since this is assuming less than a year. Next, you will continue with the rest, which is doing your share capital. This will from this item. And remember, during the year there was also issuance of share that I have forgot to show you much earlier. It is here, issuance of shares, the one that we did earlier in the additional information number. That was number 4A. Okay, now you have that issuance of shares that has increased your share capital, but it does not reduce any profit whatsoever because this is not bonus share. So therefore, what you would do is you would go and check what is the total reserve from asset revaluation reserve and the retained profit. So go and total up that figure, find out how much is the figure, and if you total up, it would be 261,262,1,380. because the total from the two item here, right? So you get the figure here to be reserve 2621380, which is this two figure here. The two figure here. Okay, I put blue there for you. All right. Next, we go on with the non-current liability, which is our 10% debenture. There was no change to the debenture. So let's just do it and tick whatever you have done. So we are not yet done. Bank, yes. 10% debenture. We are mostly done with everything. So we just need to include our accrued expenses that and also tax payable in our current liability section. So trade payable was 45,870. These are from the information here, which is under your accounts receivable and accounts payable row. Okay, you have 45,870. Then you need to include the accruals. Remember accruals, one of it is already done earlier when you were doing your expenses workings here. That was auditors fees and debenture interest accrued. So that was the two thing. That is 35,000 and 31,500. Tax payable is the difference between tax charge and tax paid. Okay, done. You are done with the preparation of preparation of financial statement, and you are done with the full answer. I hope you will revise more and do more questions. Thank you for watching. I'll see you when I will see you. Till then, Assalamualaikum and have a pleasant day ahead.